Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back KS family. Let's run the numbers. What we're going to do today is something really interesting. We're going to compare the DXY to Bitcoin. I saw this particular chart on Twitter and I wanted to take you through it as a crypto technical analyst would look at it. But first, let's have a look at this particular post. What is it actually showing? We can see the DXY. The DXY is in green. It's coming up and up and up. And what this particular person has said, this is the start of the bull run. Now, what is that actually? Is that the start of the bull run? Okay, we'll come back to that. Now, then we can see the DXY going down. And this person says that's the bull market top of 2018. Okay, well that's interesting. So then the DXY comes up and up and up and it hits this particular point. And this person says this is the start of the bull run in 2020. And then it comes down, bull market top 2021. Start of the bull run in 2022. Is this possible? This is really interesting analysis. But as crypto technical analysts, we take nothing on face value. What does this actually show us? For someone new to the crypto market, they would look at this with a sense of certainty and say, wow, oh, the DXY is going up. That means the bottom of Bitcoin is in. Oh, I can see the tops here and here. Okay, and this, oh, wow. Oh, it's certain. I'm going all in and more. Fantastic. It's a buy. As crypto technical analysts, we scientifically track investor attention and we always substantiate the news. We dig behind the news and we look at what's happening. We're like scientists, we're like detectives, and we don't take anything on face value. We know how to mark up charts. We know the science of the market, interdependencies between external and internal markets. We enhance our pattern recognition and find the market's focus. We have a focus on real wealth, and I'll come back to that in a minute because it's incredibly important. And we know when to buy and sell because we've got specific methodologies that we can apply to any market type. Bull market, bear market, consolidation makes no difference to us. We can make money in all three. We understand that no knowledge equals losses, and we also understand that people go through zones, zone 1 and zone 2, and zone 3 and zone 4, and they have different behaviors. Basically, all investors and traders start in zone 1, the panic zone, when they don't know what's happening, and everybody starts there. So if you're in zone 1, we've all been there, so don't worry about it at all. And zone 2 is the blame zone. The concept is certainty and terror is the name of the game in zone 1 and zone 2. And a lot of people, a lot of influencers know about certainty. They know that people want certainty. They want the answer. Is it going up? Is it going down? What's it going to hit? By what time? By what date? Exactly. And there's a very, very good reason for this. That's basically because when people invest, they hold. A lot of investors don't know when to sell because the nature of investing is to hold for the long term. So that makes a lot of sense. So they hold, hold, hold. They've got diamond hands through the ups and through the downs. Crypto technical analysts do not inhabit Zone 1 and Zone 2. Zone 1 and Zone 2 are a license to lose money. They have a lot of rules inside here, which is all geared towards losses. And many people go through this process and they just realize that they need to learn all about the market. They're involved in leverage trading. They believe that because they turn up to the market, they should get a participation award. And that just doesn't happen in the market. You need knowledge. In Zone 3 and Zone 4, it's all about probabilities and rules. It's all about knowledge and skill. In Zone 3, people make money because they follow making money rules. In Zone 4, they keep the money because they have wealth thinking. There's a difference between rich thinking and wealth thinking. A massive difference. Crypto technical analysts also focus on real wealth, and you're going to see why this is important. Maintaining a positive excellence life trend. one of inner peace and outer peace. So many people are in conflict with themselves and with other people. Conflict is the hallmark of Zone 2. Zone 2 is where learning is really, really difficult because people are not learning, they're blaming. They're getting angry at other people. Unfortunately, getting angry at others is just a license to lose money. Learning means forgiveness, not of other people, of yourself. And when we have learning, we can go into the make money rule zone and the keep money rule zone. And what's the difference between making money and keeping money? It's a very, very big difference. It's a focus on positive excellence, dividing those two zones, Zone 3 and Zone 4. In Zone 4, we look at money as a byproduct of doing the right thing. What is the right thing? The right thing is integrity, decency, doing the right thing when nobody is watching, being kind. These are underrated qualities in our society. Everything is now, now, now. When we have a positive excellence life trend, we just sit back on that and we say we're not competing with anyone but ourselves. We know that we're unique, so we don't need to look to another person. If another person does really well, we're happy for them. We're not jealous. And you may say, Ken, what are you talking about? I just want to know if the DXY predicts Bitcoin. What are you going on with all this fluff for? Well, it's really important. That fluff actually dictates your profitability. If you think about integrity and decency, a lot of times people will actually push their charts around. They'll rescale them to make a narrative fit. We would never think of doing that as a crypto technical analyst. And any crypto technical analyst that would do that is persona non grata in my eyes. We actually just present the data as it is. As a crypto technical analyst, how would we look at this data? What we'd actually do is to put the DXY against Bitcoin going all the way back using exactly the same pairs as that person put up on Twitter. That is the US dollar currency index 1 week TVC against Bitcoin, and the only one that stretches all the way back to pretty much the start of Bitcoin's price history is the BLX. So we're on the 1 week BNC and the DXY TVC. Okay, so we've got the same pairs. Now when we look back, what we're trying to determine is what happens with these particular tops. Does the bottom of the DXY actually match the top of Bitcoin? When you go and look at a longer time period, it should be really, really clear. We can even do something like this. How about we just look at it from this perspective? We can say this is the bottom of, it would just be about here. That's the bottom of the DXY. Is it the top of Bitcoin? No, it's not the top. The top of Bitcoin was earlier. It was there. That's actually quite a time range. What about here, looking at the bottom? The bottom of the DXY is about there. Is that the top of Bitcoin? No, it's actually sold off. Is this the top of Bitcoin? Well, we had quite a spike up here. So you can see that it's not exact, but that doesn't invalidate it. What about here? What about when the DXY sells off? Is it predicting a top? What about here? This is pretty much the bottom here. Was the top there? No, the top was there. That's not bad. We can see that there's some correlation. Well, let's go back further. The bottom was here. Where was the top on Bitcoin? It was actually a bit later. Okay, so this is quite interesting. There could be some degree of correlation. Now, when we look at the particular analysis here, he's not just doing peaks and troughs. He's trying to understand what is actually happening. Do we pay any attention to this other noise? Well, let's have a look. There's a lot of noise here. What happened here when we had the peak of the DXY? Was that the start of Bitcoin's ascent up? Just to clarify, we're looking at this point here, and this person says this is the start of the bull run in 2017. There are a lot of ways to define the start of a bull run, but from my eyes, the start of the bull run is actually back here after capitulation occurs. And when would that be? You can see that there's a bit of basing action. And why aren't I zooming in here? I'll show you what happens when you zoom in. There's a couple of different ways to zoom in. One is that we can do this. We can change the scale, and we can do all sorts of things like that. That's not a good way to go, because if you do stuff like that, all the associations between the core data can get very, very lost. Let's have another way of looking at it. I suggest the best way to keep the integrity of the data is to actually use the magnifier to zoom in. What we actually see here, the bottom of this particular run, that's capitulation. We could go a little bit further on and we could say about there, for example, and we just zoom out. So we can see this is the start of the real bull run. It's not there. And what is the difference between that? From a date range perspective, from here to here, oh, it's just a modest 602 days. Let's compare back. What about the start of the bull run in 2020? Well, this can be a bit misleading. Don't we want the start of the bull run full stop? We can say that the bull run starts after capitulation. That's a capitulation event. So let's have a look at it. When we say a bull run, we're saying that price is going up. There's many different ways to actually define. Many people say the start of the bull run is when the previous peak is crossed. That's one way of looking at it. The other way is to say after capitulation, the bull run starts. That's the best way to say it because it's the actual fact. You can see that I'm covering a lot more data here because I want to see all the associations. I want to see if things actually pan out. But if we tried to make our chart look like this chart, how could we do it? So July 2015, and notice there's space for this legend. So it goes up to 2024. First, let's get this part of the price action right. This is to capitulation in 2015. So let's see how we could do that. So capitulation in 2015 is here. So we'll just move this scale down. Notice how everything is changing. Now, does this actually work? Because when we look back at this particular data, the DXY is absolutely shooting through there. How can it shoot through there? The only way it can shoot through there is to actually push the data around, make it different. This is one of the things that can happen. And the reason that I want to bring this to your attention, I just don't want you going out into Twitter or anywhere out, the mainstream media, and saying that chart is correct. You can see how people can move charts around all over the place. This is a really, really scary thing. This is why every crypto technical analyst doesn't care about the chart that they're looking at in the media. They go and recreate it themselves. All the masterclass students know this. This is what we do. Now notice we don't have 2024, so we need to scale or we need to push. Okay, we've got 2024, but we've lost this side, so we'll need to scale back. Okay, now we're getting that sort of push, but it's not the same push as we see here. Look at this push. It's completely different. This is what I'm trying to explain. When you look at a chart, just don't buy what it's saying. Go into the software and actually create it yourself. This is called TradingView, and you can get TradingView by clicking the link in the description. It's just basically the show more. I use TradingView for charting. There's a link there for you, and it's free to use. Sometimes people rescale axes because they want to bring out a point. I don't believe any crypto technical analyst should do that, ever. Just keep the data exactly as it is. There's a lot of reasons for doing this. One is absolutely to do with credibility. You don't want someone coming along and saying, hang on, you moved the axis. There's no way that you could get this price action in there unless you rescaled. a particular axis. And that means you're trying to create a narrative. That is very, very dangerous. These are the skills we learn as crypto technical analysts, and they're all in the masterclass. When you look at particular levels, we can see also that the concept was the start of the bull run, the bull market top of 2018. You know it's not the bull market top. You can even see it from your eye. If you just take a line up here, you can see it's clearly not the top. But this is something that always happens. People say close enough is good enough. It's never good enough to be close. You have to be precise. Exact precision is a rule that we use as crypto technical analysts. Precision is really important. When we look at this particular price action, we can see the DXY is actually lower right here. This person should have actually pointed this arrow to this point. But what would happen if they did that? They would strike about here. That would kill the story. As crypto technical analysts, we absolutely look at reality. We don't care about stories. Stories cost you, and they cost you very, very dearly. Also note, when people change scale like this, when people move things around, they can basically just make data whatever they want to make it. And this is really, really scary stuff. You must always think to yourself, is this data correct? Can I recreate it myself? If you can recreate it, that's fantastic. Now this low here does give a concept of where the bull market top could have been, but could the bull market top have been there? You can see that this is not such a great indicator, because as it was going down and down and down, what happened? We had a big kick up, and then they both moved together. You've got to be aware of this. Sometimes even in negatively inverted relationships, one moves down, the other moves up. They don't do so in perfect synchronization, and people want to be certain. They want the answer. They want somebody to tell them, I'm 100% certain this is going to happen. If you ever see that, 100%, please just run like hell, because the concept is there's no such thing. 100% return, 0% loss is used by scammers all the time to entrap retail thinkers, zone 1 and zone 2 thinkers, into actually falling for their scams. There's no such thing as a guaranteed return in the crypto market. Crypto is incredibly volatile, but if you know the rules, if you understand how percentages work, and this is a critical thing to do, if you have the rules and you abide by them, if you have your volatility fund up, if you're just addicted to price reality and collecting and detecting probabilities inside the market, you'll do really, really well. And we don't light switch. We don't go all in or all out because of certainty. We gradually come in and we gradually come out like a dimmer. And it's very, very important to focus on a number of high quality cryptos. The 100 to 1 shots, the 1,000 to 1 shots. Yeah, you may win. You may be one of those 100 to 1 shots, but you've got a 99% chance of losing it. And a lot of people gamble their entire future on picking these 100 to 1 shots. It's not gambling in this market. It's all about knowledge. All the gamblers get cleaned up by the professionals. You don't want to be gambling in this market. And professionals, when they gamble, they know what they're doing. It's not gambling. Gambling is a lack of knowledge. It's very, very nasty. And always buy on red. Buying on red is incredibly important. It's one of our absolute rules. So what's the takeaway from this? This particular analysis is saying when Bitcoin comes up, it's because the dollar is going down. Is that correct? If we're saying that, what it will actually mean is that each time the DXY goes down, Bitcoin would go up. If we just drew a green area in here to say the relationship held, we would expect this whole thing to be green. What actually happens? I can do a bit of a stylized analysis for you. I'm just going to draw out a line across this price behavior of the DXY. This just means that this is coming down, then it's going up, coming down, going up, coming down, going up, coming down. You get the idea. So let's do that one. And then I can actually hide the DXY. So we've got a basic understanding of what is happening. Now I need to do the same for Bitcoin. We can see that Bitcoin comes up, goes down, comes up, goes down. Just loosely fitting to price action, but we're getting the basics in there. Now we can also turn this one off. Now what we would anticipate, if it's always a negative correlation, inverse correlation, we would expect as the DXY goes down, Bitcoin will go up, and we will expect that all the time. Let's see what happens. We can see the DXY coming down, Bitcoin going up, but the DXY bottoms out before Bitcoin does, so they go out of alignment. Anytime you see a black area, the DXY and Bitcoin are moving in the same direction. Anytime you see a green area, that's the assertion that what you see is as the DXY makes a peak and starts to come down, Bitcoin goes in the opposite direction. Inverse, same direction, inverse, same direction, inverse, same direction. And this is just from a 50,000 foot view. We're doing this because we want to see how many teeth there are. Is it all green? Is it all black? We don't care about what other people tell us. They say the DXY is inversely proportional to Bitcoin 100% of the time. Being in financial markets for decades and decades, that is not correct. The DXY measures so many different things. It measures relative strength to a basket of other currencies, and so many things will change the DXY's power. But if we look recently, what we can see is there's some degree of alignment. We could even say, suggest that that's not exactly right. We could pull this green back just a little bit because the DXY is going up and Bitcoin is going up, but it's a bit flat, so I've just been on the conservative side. Again, integrity in your analysis is absolutely critical. It's better to be more conservative than less. So what you're seeing here, a lot of people always talk about the DXY inversing Bitcoin. You can see just from this cursory analysis that that is simply not the case. The DXY goes in and out of phase with Bitcoin, and it's been going in and out of phase with Bitcoin as well. It's only one data point. We need so many data points to actually understand Bitcoin's price momentum. So I hope this has helped. I want to steer people out of Zone 1 and Zone 2 into Zone 3 and Zone 4. We can literally change people's lives by them abandoning certainty in the crypto market. There is no such thing as certainty. Whenever people say it's certain, it's 100% that this is going to happen, just know that's not true. I hope you will look at analysis like this through different eyes. I want you to have a very professional mindset. Professionals always run the numbers, and that's why I start every episode with let's run the numbers, because I'm basically saying go independent of the news, go independent of the goodwill of other people. This person is only trying to help people, and it's really, really interesting to look at this. What I do is I take things to pieces. I basically look at something and say, is this correct at all stages? And I want to know right down to the 20th decimal point if it is correct or not. Crypto Technical Analysts use exact precision. If you're interested in becoming a Crypto Technical Analyst and scientifically tracking investor attention through price, which is reality, not promises. Promises can and do sometimes happen, but other times they don't. So we must always track reality, just like what we've done here. There's a link in the description of this video to the CryptoTradingKS Masterclass, and we have quite a few references. You might like to look at those, and you can get 80% off by reaching out to an ambassador. Just check this link here, click this link to see who those people are. I hope this has helped, and always remember, we need to do the hard work. If you work hard at it, you'll earn it, so long as it's with positive excellence, not negative excellence. I hope you found this content useful. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care, and see you next time. Bye for now.